the incumbent banks that have been around since before the internet sometimes struggle to integrate the latest technologies because they are relying on legacy systems that are decades old, whereas the new startups that come around today don't have these legacy systems that can straight away launch with the latest fancy technology.
Hey gang, it's Tuesday, August 24th. Grace, Victor, and listeners, welcome to the Behind the Numbers Daily, an e-marketer podcast made possible by VTEX. I'm Marcus, and today I'm joined by two folks. First of all, we have one of our research analysts on the payments and commerce team. It's Grace Broadbent.
Hi Marcus, thanks for having me.
Of course, thank you so much for hanging out. Welcome to the show. We're also joined by one of our financial technology analysts. It's Victor Chatenay.
Hi Marcus, thanks for having me back.
Hey chap, absolutely. So, today's fact before we start the episode. There's a name for that feeling you get when you're high up and think about jumping. So whether you're at the top of a frighteningly tall building or looking over a steep drop from a highway, you've probably had that weird moment where you ask yourself, what if I jumped? But it turns out you're not alone. So much so that there is actually a name for that phenomenon. It's called the call of the void feeling or the high place phenomenon. Have you both had that thought? I have it way too often.
Every time I cross a bridge.
Yes. Okay. Maybe that's not a good thing. I don't know why I'm so excited about it. Victor?
I have had that thought, but last time I was on, you talked about Dutch funerals, and now you're talking about the call of a void. So there's a theme happening there.
This podcast gets pretty dark sometimes.
Yeah.
So it's when you actually think about it, it's an insane thought. Like if you asked yourself, well, what would happen if I jumped? There's never been a more obvious answer. You would smash into the ground at an unreasonable speed. That is 100% what would happen next. And yeah, I still think it all the time. Anyway, today's real topic, will we ever see a digital dollar? So folks, we're talking all about digital currency, central bank digital currencies to be specific. We'll talk about what the hell they are, why banks are interested in this space, who's doing what around the world. We'll talk about how the US is progressing and some other things as well towards the end. So let's start, folks, with what is a central bank digital currency? We'll be referring to them quite difficultly. We'll be trying to say CBDC, which is the acronym, which is also really hard to say. But if you hear us say CBDC, central bank digital currency, folks, what are they?
CBDC is a type of cryptocurrency that is distributed by a central bank. Right now, it's only in the pilot and experimentation stages, but there is extremely high interest in its development. Over 81 countries are currently exploring development of CBDCs, which represents over 90% of the global GDP.
I would just add to build on the last episode, which I came on about cryptocurrencies and where CBDCs fit is, we talked about how cryptocurrencies were trying to be a currency, just like the dollar, just like the British pound. But in the long run, that's not what ended up happening. And because they are inherently volatile in their value, they're not very good at being currencies. And most people use cryptocurrencies like Bitcoin as an investment product that they invest in the hopes that its value will go up, but they don't use Bitcoin to buy goods and services. So essentially what CBDCs are trying to do is take the ideal cryptocurrencies and with full backing of a central bank, use the blockchain technology on which they're based to actually create a currency that can be used to buy goods and services.
So the Economist was describing them as CBDCs as gov coins. Is that a term they just made up or is that a well-known term?
So I think that's what cryptocurrencies like Bitcoin are known as. We call them coins or alternative coins if it's Bitcoin and all the other types of cryptocurrencies. So again, it's kind of what The Economist is doing there is making that connection between cryptocurrencies, which are decentralized and not backed by any government or any one authority, and CBDCs, which are again based on blockchain technology like cryptocurrencies, but these are backed by a central authority, in that case, the central bank.
Okay. So Just to explain for the folks, we've got a couple of flavors of different things going on here. So, Grace, you just recently wrote a report titled Payments in Blockchain.
Yes.
And so there was a graphic you have there, sourced Business Insider, Fox Business, Block Data, and CoinDesk, and you explain traditional cryptocurrencies, stable coins, and then central bank digital currencies. So can these different flavors of cryptocurrency assets. Can they coexist?
Yeah, they can absolutely coexist. So we have typical cryptocurrencies like we have all heard of Bitcoin, but then we have stable coins, which also currently exist. Kind of famous examples of it right now are Tether, or what Facebook is experimenting with Diem. And so a stable coin is pegged to an underlying asset like the US dollar. So it aims to take away all of the stability Bitcoin is famous for. So the kind of idea is that stable coins could be then used for payments since it's pegged to the asset. But then CBDCs take it even one step further, where they are also pegged to an underlying asset, but they are now going to be regulated by central banks. And they really try to combine the best aspects of cryptocurrencies and fiat currencies like the US dollar. And they would have the same level of parity as other forms of money and the same legitimacy and positioning within the banking system.
So you've kind of led into my next question, which is why are banks even interested in this space? Why would they be interested in a digital currency, in a CBDC?
It's really to be able to use cryptocurrencies in the payment space. Right now, there has been experimentation with even using Bitcoin for payments and things along those lines, but the CBDCs would actually be regulated by the government. They would be stable and really trying to take those good aspects of cryptocurrency, but combining it with the stability and the regulation that could get from being regulated by the central bank.
Yeah, and it's also about using one of the key features of blockchain, which is that it's a decentralized database where you can see all of a transaction on it. So when you think of cash transactions, for example, they're very useful for criminal activity like money laundering, because if I give you, $5,000 in cash, no one sees that. It's not recorded anywhere. We can just exchange, suitcases.
Let's not talk about it on the podcast, okay? Let's not talk about our business dealings on the show.
Well, moving on. So the benefit that CBDCs see in blockchain is that they can see economic activity and transactions between everyone through the blockchain. So it would be easier for them to identify criminal activity, but it would also help them inform their monetary policies. So, should we increase the money supply? Should we raise interest rates? That sort of thing. It's much easier. They would have a lot more data from blockchain transactions to inform these decisions.
Okay. So helps them maintain control, better manage economies, inject funds where necessary. You talked about payments. So the economist was saying, in theory, they could do things like pay citizens directly. So stimulus checks, for example, there's a bit of a fiasco with those recently. They'd be able to just do that, bang, you're paid.
So that's another of the big benefits is what they call financial inclusion, which is a big buzzword in fintech. But as far as CBDCs are concerned, it's this idea that a lot of American citizens, if we take the US example, are unbanked or don't have access to a bank account. So if you're trying to send them relief funds, such as during COVID, that's really hard to do because there's no bank account to send it to. And so the idea with a blockchain and the CBDCs is that have a blockchain wallet on their smartphone that the central bank could directly and instantly send COVID relief funds to. I saw online that the IRS, for example, had to send millions of COVID relief funds through the mail in paper form because people didn't have bank accounts. And of course, that takes time. That's prone to errors, at a time when people really relied on those checks.
Right. And then you've got to take that check and actually flip it into money by taking it to your bank anyway. Yeah. So it's still not technically in your bank. So there are two types of CBDCs, right? Wholesale and retail. What are they? What's the difference?
Wholesale CBDCs would be issued mainly for financial institutions that hold deposits with the central bank. They would really just be a way to make interbank payments and settlement easier. What we hear more about in the media of the development of CBDCs really refers to the retail CBDCs. That is what would be made for the general public. That is how, like we were just talking about, how a government could distribute funds to its citizens. That would be known as a retail CBDC, really just made for the consumers so they could spend that money themselves.
Okay.
And I would add to that, and just in relation to that question about wholesale and retail CBDCs, a point of confusion is a lot of people think that they're already dealing with a digital currency because they have online bank accounts and when they do online payments. But that's not central bank money. You hold central bank money in cash And then what you're dealing with the banks is money that your bank is liable for. And then your bank has reserves at the central bank. But the online money you deal with in your bank account is not a central bank digital currency. Right? So what Grace is talking about, especially with a retail CBDC, this would be a digital form of that cash that the central bank is liable for.
Right.
As Grace said, so with the wholesale CBDC, it's not really reinventing the game because financial institutions and the central bank are already dealing digitally with central bank money. So it's just about improving the efficiency of how they do transfers between each other. But with a retail CBDC, that's literally taking central bank money that we deal with in cash and making it digital.
Right, exactly. So who's doing what in the central bank digital currencies world? So the Atlantic Council, they had a map of the world showing the current development status of CBDCs. Axios summarizes it by explaining, Grace, you mentioned at the beginning, 81 countries representing over 90% of global GDP exploring the development of one. So everyone basically is doing it pretty much. And of those 81 countries, five countries have launched one, a CBDC, central bank digital currency. 12 are in pilot phase. 16 have CBDCs in development. The US is one of the 33 countries still in the research phase. 2 have tried and cancelled them, and 10 are inactive. So it's quite the patchwork across the planet Earth when it comes to who's trying what. Grace, which countries are leading the charge here and why?
Well, the Bahamas was the very first country to pilot and launch a CBDC. Theirs is called the Sand Dollar.
Such a good name.
And so theirs was the first CBDC to the market. It piloted in late 2019 and was first issued in October 2020. So they really have kind of led the pack in development. But the country we hear about most now in conversations surrounding CBDC is China. They are kind of the first major global power, the first major economy. Their CBDC is still in pilot form, but we believe they will be the first major global power to bring it to market. They are in very advanced stages of the pilot. At the end of June, it had their CBDC, known as the digital yuan, had been used for over 70 million transactions, valuing over $5 billion. They have a lot of partnerships with the banks in the country to distribute them. They're working with ATM machines that people can cash in and cash out of these CBDCs. And the hopes is that they plan to fully launch next year in 2022.
That's why I'd say just about the definition of what stages these projects are at, and the ones that have launched, like China and the Bahamas, is that technically they haven't launched insofar that they're not available for every citizen, and the product is not live. But what's happening is the Bahamas and China are at a stage where a select number of everyday citizens is able to use it and test the use of these central bank digital currencies. But technically, none of them have gone countrywide as we speak.
Right. Yes. So China, they launched their pilot of the digital yuan in April 2021. Apparently about 500,000 people are part of that pilot, or were at the beginning at least. They might have expanded it since. All right, let's take a quick word from our sponsor, VTEX. Then we'll be right back with the conversation. Everyone is talking about digital transformation, but what does it mean in real life? Digital Insider is a new podcast series about the digitization of retail, where business leaders, academics, and thinkers discuss how businesses are transforming and give their perspectives, practical advice, thought process, and lessons learned. Go to digitalinsider.com to learn more, or listen to it on Spotify, Apple Podcasts, or wherever you get your podcasts. There's quite a big difference, though, between China and the Bahamas. Population would be a good place to start. Many other differences. India as well, you guys were telling me, is one of the other markets that's trying to push ahead with this. But then you mentioned some smaller markets. The Bahamas, we just mentioned, the Sand Dollar. Jamaica, Ghana as well, you were telling me. How come we're seeing such a difference in the type of countries which are getting into this? But the big countries like China and the smaller ones like Jamaica, for example.
I think what you're saying is that these countries, because they are such different economies, are trying to achieve a different goal with the use of a CBDC. So as far as smaller countries go, like Cambodia or the Bahamas, you mentioned Jamaica, is those countries will not have a financial system that's as sophisticated as perhaps the United States or Europe. And so they're seeing CBDC as a way to get that sophistication, or they can get a digital currency that can be used for, as we said before, increasing financial inclusion, for example. On the other side, when you have a country like China that does have a sophisticated financial system, irrespective of a CBDC, we can debate about exactly what their goals are, what their true goals are with a CBDC. But it's clear that one element is certainly something like having a lot more control over their monetary policy. And I think that as far as the Chinese government is concerned, it's about having stronger control over the monetary supply and being able to have that transparency and transactions across the citizens to mitigate things like money laundering or criminal activity.
Mm-hmm.
Yeah, just to add on to that. So with China's development of their CBDC, they're really trying to set the international standard for it. They're hoping to become the first, set the standard, kind of do the breakthrough technology, versus the smaller countries really have a different aim for trying to kind of with this development. So they, like Victor said, are really trying to implement CBDCs to help with financial inclusion. It can help them more easily distribute social and welfare payments to their citizens. Bahamas, for example, they're a relatively well-off nation, but they also have a scattered population. But there is high mobile penetration in the country, which kind of makes it perfect position to kind of use a CBDC. They are able to kind of get payments to their citizens as needed. Some of these other smaller countries really have populations that rely a lot on remittances or like payments from family and friends back home. And so CBDCs can really help them get these payments in near real time, which is obviously very important to them. And so kind of developing a system for faster payments is really important for them for definitely different reasons than China's exploring it for.
So we're going to touch on that in a second with this next example. So El Salvador, they're doing something a little bit different. Back in June, Rebecca Falconer of Axios wrote that El Salvador's legislator just became the first in the world to vote in favor of formally adopting Bitcoin and making it legal tender, with plans to use it alongside the US dollar, the nation's official currency. According to the law, citizens will be able to use Bitcoin to do everything from paying taxes, paying off debts, to buying goods and services. So folks, how is establishing a cryptocurrency like Bitcoin as legal tender, how is that different from what CBDCs are doing?
What's El Salvador done is kind of rushed to the finish line ahead of all these countries that we just talked about and gone straight to designating a decentralized cryptocurrency here, Bitcoin, as legal tender. So the benefit in that is that they don't have to work through pilots and trying to create a CBDC, which is in a way untested, and we haven't seen one being live yet. What they do see is Bitcoin, which has been around since 2008 and is still used today. There's still millions of people across the world that have invested in that currency and have confidence in it. So I think as far as the El Salvador government is concerned, they saw that it's as good as a store value as any to make legal tender. And we don't need to, spend years implementing a CBDC.
Right.
Yeah, and just to add on to that, El Salvador is really just trying to find a kind of a quick solution to the unique problems of their country. They have dealt with a lot of inflation, so Bitcoin is kind of an alternative to their fiat currency. Also, in the country, 70% of the population lacks access to traditional financial services. And so this is really a way to get digital payments into the hands of their citizens without requiring them all to sign up for bank accounts.
It's the same benefits achieved by the CBDC of financial inclusion and trying to give these people financial freedom that they may not have had because of the existing financial system has kind of failed them. But of course, most central banks would say we'd rather do this on our terms than rely on external technology, in this sense, Bitcoin.
So how far along is the US? Where are we at? I say we, America with an English accent. How are we doing?
We are definitely kind of lagging behind where China is and some of these other nations. We are still very much, again, the collective we are in the research stage of it. The Federal Reserve has definitely talked about how we're investing heavily in the technology, is their words. But Chair of the U.S. Federal Reserve, Jerome Powell, has given a statement saying that the U.S. doesn't feel a need to be the first. So they are, and they have said that we are still definitely years away from implementation. But then also, I think more recently, as the US has seen kind of China make even more development with it, another one of the Federal Reserve governors, Lael Brainerd, just spoke last month on the urgency. She sees that the US really needs to speed up its development so it doesn't fall behind China and some of these other competing markets.
And I would say in defense of the United States, I mean, it's hard to upgrade their system to a brand new one based on blockchain when theirs is so old and is already so sophisticated. So this is something that we see, I can say as a fintech analyst, we see this in the sector where the incumbent banks that have been around since before the internet sometimes struggle to access the latest technologies, integrate the latest technologies because they are relying on legacy systems that are decades old, whereas the new startups that come around today don't have these legacy systems that can straight away launch with the latest fancy technology. And so I think you can compare that to the US, where compared to somewhere like, say, the Bahamas or Jamaica, they have such a big, complex, sophisticated system that to transfer or to connect even a central bank, a CBDC, to that is challenging. It will take time.
So in 2018, Mr. Dorsey, Jack Dorsey, Twitter and Square CEO, part-time Bitcoin fan, he said that Bitcoin will become the world's quote-unquote single currency within 10 years. So that'll be by 2028. At a Bitcoin conference in July, Mr. Dorsey, he took his hopes for Bitcoin a step further and said that he hoped that Bitcoin could create world peace. That's a lot of pressure for a digital currency, if I'm honest. But that aside, Jay Peters of The Verge was noting that Mr. Dorsey had said that cryptocurrency, Bitcoin, will eventually unite the world. Is he right?
I think if we take it from the perspective of how Twitter's looking at it, it's a global platform that does business in basically all the countries in the world. And so they're looking at Bitcoin thinking, maybe here's a currency that we can use to power transactions on our platform across, irrespective of which country we're in. If I take another quote that Jack Dorsey said at that conference, he said, if the internet has a native currency, a global currency in Bitcoin, we are able to move so much faster with products, and we can reach every single person on the planet instead of going down a market by market by market approach. So you can see there that he's thinking of Bitcoin as this internet-based currency that, just like the internet doesn't respect borders, this decentralized currency can power that borderless economy, which, as far as he's concerned, is perhaps more useful than having to integrate one CBDC per country.
Let's talk about Facebook for a second, because they also have an interest in digital currencies. So their project called Diem. Okay, we established before the show, I might be saying that wrong, and no one said that out loud. I think it's the first time ever. So if I got that wrong, then you're only yourselves to blame, okay? I can't take responsibility for that. It's too much pressure. But their project Diem, which is Facebook's digital currency project, formerly the Libra Association, founded by Facebook in 2019. So this project, how is a project like Diem for Facebook, how is that different from a CBDC? And what does something like Diem have, what kind of an impact does that have on the CBDC development, if any?
Yeah, so Diem is a stable coin, as we were talking about before. It would be pegged to the US dollar, I believe. And it's very interesting because Facebook's development of what was Libra and is now Diem really kind of triggered the next stage of development for CBDCs. Banks, especially the US bank, kind of started to see it as a potential threat, where Facebook is trying to create this new currency for the country and potentially the globe. And the government didn't really want Facebook to have all that power. I think we can say it like that. So it was like, it kind of almost inspired governments to say, okay, we need to create our own. We can't leave it in the hands of big companies like Facebook or other ones that kind of want to explore it.
Yeah, if we to build on that, if we go on the idea of central banks wanting to control monetary policy, they're looking at the Facebook Diem just like they are Bitcoin, which is if there's these massive currencies widely adopted, used by millions of people across the world, then they're outside of our financial system. They're outside the US dollar. So how can we control the monetary supply and monetary policy if everyone's using a different currency? So I think a lot of central banks look at what Facebook is doing and Bitcoin and said, all right, you want a blockchain-based currency, you can have it, but it's going to be on our terms, not the private sector or Bitcoin.
Mm-hmm.
really there's kind of no need for a diem and a digital dollar to coexist. The chief economist of the Diem Association even said that if the Federal Reserve were to launch a CBDC, that they would then fade out their stablecoin if it was already launched at that point. Facebook was really just trying to do what now governments are doing with CBDCs.
Yeah, so I didn't realize $100 billion in payments have been enabled by Facebook over the past year.